You see Shopify everywhere, right? It feels like they're just this absolute giant in the e-commerce world. But when you actually look past the shiny storefronts and start digging into their financial reports, a much more surprising and frankly, a much more complex story starts to emerge. So today, that's what we're doing. We are decoding those numbers to figure out what is really going on with the business.
We all get the success story on the surface. But what do the numbers, the actual hard data, have to say? Is this a simple story of just unstoppable growth, or is there something else at play here? Well, that's the big question we're going to answer.
Okay, so here's how we're going to get to the bottom of this. First, we'll start with a snapshot, just to get a sense of their massive scale. Then we'll look at their two main revenue engines. After that, and this is the fun part, we're going to tackle the real puzzle, their profitability. And finally, we'll see what it all means for the future.
All right, first things first, let's just try to get a handle on how big Shopify actually is. I mean, we're not just talking about some popular platform. We're talking about a major force in the global economy.
Okay, let this number sink in for a second. $74.8 billion. That's how much stuff was sold through Shopify stores in just the first 3 months of 2025. I mean, to put that into perspective, that's more than the entire annual GDP of some countries. That's the kind of economic engine we are dealing with here.
And it's not just big, it's growing, and it's growing fast. This chart here shows their gross merchandise volume. That's basically the total value of everything sold on the platform. In just that first quarter, you can see that number jump 23% compared to the year before. That is absolutely incredible growth, especially at this kind of scale.
So, with all that cash flowing through the platform, how does Shopify itself actually make its money? Well, it turns out they have two main engines that are driving all their revenue.
Their total revenue for the quarter was over $2.3 billion, and it's pretty neatly split into two streams. You can see the big piece of the pie, about 3/4 of it, comes from what they call merchant solutions. The rest of it comes from subscription solutions.
Here's a really simple way to think about it, because it's actually a pretty smart model. Subscription solutions, that's like the fixed monthly rent that merchants pay just to have their online store. Merchant solutions, on the other hand, that's more like a commission. Shopify makes more money when its merchants sell more stuff. This gives them both stability and a direct stake in their customers' success. Pretty clever.
Okay, so we've got massive growth, two really strong revenue streams. Sounds like a straightforward success story, right? Well, this is where things get a little weird. Let's talk about profitability. And at first glance, everything looks fantastic. I mean, if you just look at their core business, the part that helps people sell things online, they are solidly, and I mean solidly profitable, $203 million in income.
So this is the puzzle. If their actual operations are making money, where in the world is this huge $682 million loss coming from? What gives?
The answer is right here, plain as day, in their own financial statement. As you follow the money from the top-line revenue all the way down to the bottom-line profit, you see this one massive item that just completely flips the script. It takes a healthy operating income and turns it into a gigantic net loss. And there it is, a loss of over $1 billion. This isn't from their main business of selling software. Nope, this is from their investments. In just 3 months, the value of their investment portfolio absolutely plummeted by over $1 billion.
Now, it's really important to understand what this actually means. It's what's called an unrealized loss. The easiest way to think about it is this. If you own a stock and its price goes down, you've lost money on paper, right? But you haven't actually lost any cash until you hit the sell button. Well, that's exactly what's happening here, just on a mind-boggling scale.
And look, Shopify is super open about this. They state right in their own reports, and I'm quoting here, that these investments can cause huge swings in their earnings. They're basically telling you, hey, this part of our business is going to be a wild ride.
And if you need any proof of just how volatile that is, just look at the very next quarter. That $1 billion loss, it completely flipped into a $300 million gain. It just goes to show you how unbelievably unpredictable this side of their business really is. It is a total roller coaster.
So, okay, with this crazy level of unpredictability in their finances, what is Shopify actually focusing on for stable, long-term growth? Let's take a look at their strategic priorities.
When you look at what they're telling investors, their forward-looking statements, a really clear game plan emerges.
They're pouring money into tech like AI to make their platform smarter. They're expanding internationally to find new customers, and they're really trying to attract bigger brands to get more revenue per customer. It's all about making that core commerce engine stronger and stronger.
All right, so after digging through all these numbers and reports, what's the big takeaway? What's the real story of Shopify's business right now?
You know, it's almost like you're looking at two different companies that have been bolted together. On one hand, you have this really solid, steady ship that's the core commerce business, and it's growing reliably. But then, strapped to the deck of that ship is this wild, unpredictable roller coaster, their massive investment portfolio that's sending the company's final bottom line on a thrilling but kind of terrifying ride.
And that really leaves us with the big, multi-billion-dollar question for the future of Shopify. Is this high-stakes investment game a brilliant strategy that's going to fuel its next decade of growth? Or is it, quite simply, the company's single biggest risk?